Well, good afternoon to everyone joining us on our LPL-KA study group event here. And my name is Peter Lesnick. I have the privilege and pleasure today to welcome Will to our speaking engagement, and just want to open us up in a prayer before I introduce Will and his role at GuideStone Mutual Funds. So, Heavenly Father, Lord God, as we gather this afternoon in many different areas of the country, Lord, we know that you are our sovereign Lord, and that we depend on you, especially in times like this, Lord. And help us to get the proper discernment and the guidance that we're looking for in our practices, Lord, that we may in turn then lead our clients to a path that honors you. In your Son, Jesus' name, amen. So just a little bit about our speaker today with Will Lofland. He's the head of distribution over at GuideStone Funds, which is located out in Texas. Will came to GuideStone in 2014. Prior to that, though, he held some high-level positions in the institutional side of Fidelity. Prior to Fidelity, though, he was an advisor like all of us on the call today with Merrill Lynch, which was back then a division of Bank of America. And he's also done some time over at the Federal Reserve Bank in Dallas in the economic and research area. And so I just want to welcome Will and the presentation that we have for everyone this afternoon.
Thank you, Pete. I appreciate that. Let me real quick change share screens real quick to bring us back over to the presentation. And first and foremost, I appreciate the opportunity to be here to talk to you all today. And as Peter mentioned, I left Fidelity Institutional Investing 6.5 years ago now to join GuideStone. And for me, I was leaving a very large, well-established firm and moving into an industry that really was still in its infancy, and to a certain degree is still today. And really, the element of values incorporation was what first drew me to the concept of GuideStone and to coming to this space. But really what sold me on it was as a salesperson, looking at what I believe to be the quality of investment product that I was walking in to represent. And, you know, to me, as I've spent time dealing with advisors over my tenure here at GuideStone, right, that's one of the first elements that comes into play for a lot of people is, you know, I am responsible to my clients. I'm helping them steward their money the best way that I can. And I want to make sure that I'm doing that in any kind of investment that I'm delivering to my client. And what I hope you will see as we walk through this today, as we talk about the topic of faith-based investing in general, we talk about building competitive portfolios. I hope you'll be able to see that that's what this industry is really starting to bring to bear for you all, is really a quality line of investment product. And I'm not just here to talk my book today. One of the things that you will see is I'm going to bring to you a variety of providers in this area, just to give you a high-level overview. And again, this is my perspective. I'm using mostly language and content directly from their website, so it's not my view on who they are, but trying to give you an understanding that you have a wide variety of options when you look at faith-based investing, in particular, what more people would identify as biblically responsible investing. So faith-based investing that is rooted in Christian values. Who is GuideStone? Why do we have any platform to talk about this? GuideStone is in essence a company that was established in 1918. We're actually a nonprofit organization. The business that we do with you all as advisors is our only taxable portion of business. We were founded to provide benefits to ministers and widows of minister, particularly within the Southern Baptist Convention. It's a capacity we have now served in for well over 100 years. And that's everything from insurance benefits to what used to be pension plans, and still some legacy business there, to today, what are running the nation's largest line of Christian mutual funds for primarily their defined contribution retirement plans. And so that is the perspective that we bring to work every day. That's what we're charged with. We're wholly owned by the Southern Baptist Convention. So that really, the value set that we bring to the table is at the heart of everything that we do. So now let's talk a little bit about really what matters to you. That's your clients. That's your clients' values and how you can integrate a faith-based solution that really brings the quality that you would expect that you routinely bring to your clients every single day. So what I'm going to walk you through today, let's talk a little bit about the universe. There are a lot of terms that get thrown around really loosely in this area. Some of them mean the same thing. Some of them have dramatically different meanings, and we'll speak a little bit to that. I want you all to understand what the marketplace opportunity is for something like this and understand what we're seeing from a lot of investor survey data, not just us, but even the secular world when they're surveying a pretty broad base of investors to understand what this opportunity set can look like for you. And honestly, some things that you might not necessarily know, but are some trends and some prevailing views of clients in your book today. And then we'll walk specifically into the faith-based funds, talk a little bit about how the process of faith-based investing has some great degree of similarity to ESG, SRI, how some providers are very open about incorporating that into what they do. And then we'll kind of close it out with why, honestly, when GuideStone came to market, why we did then and still today largely focus on independent advisors, people who build their brand, you build your business around your brand, your human capital. And why we think the relationships you develop in building your business are so well suited for this kind of conversation and implementing this type of strategy for clients. So the universe, when we think about this and when we think about definition of this and why this makes sense for you as advisors, this is a little bit of a dated statement from Michael, but again, something he brought forward to the Kingdom Advisor audience not quite a year ago now at this point. And that is the idea that so much of the financial services world continues to get commoditized. And the way that you really differentiate yourself is the specialization that you can bring to people. And faith-based is one of these elements of specialization. Many of you, as believers, you serve so many other Christians within your book of business. And so delivering a specialization around values and helping those Christians align their portfolios with their values is really one of those areas where people can show differentiation and break away from commoditization. The momentum behind this, US CIF will actually have their new rollout of this coming at the end of December. And when they looked at 2018, you saw that approximately 1 in 4 dollars under professional management was now moving under some form of ESG, some form of SRI methodology. And that represented a 38% increase over 2016 in moving up to 12 trillion in total assets from just under 8 3/4. I've seen some loose data from this, and it's actually 2020 will show that it's now 1 in 3 dollars. So you're seeing continued growth in interest and acceptance of people utilizing this type of methodology. What I think, though, is really interesting behind a lot of these numbers and where the real opportunity lies for you. So much of that initial growth trajectory was representative of institutional investors, as you see in many trends when it comes to new topics in investment management. Your institutional market adopts it first. Once you see results from what they've put their money into, then it moves on to your retail client, to your individual investor. And that's what we're really seeing is this growth within the last couple of years. This is really starting that emerging trend of the individual investor choosing to accept this type of investment strategy. So this just shows you what I mean. There are a lot of these terms. They get thrown out by people, sometimes interchangeably, but there are some very important differences, especially when you get into faith-based investing. The difference in biblically responsible are things that are rooted in Christian values like GuideStone, like an Eventide, a Praxis, a Timothy plan. The other side of that is there are Muslim funds that hold themselves out as being faith-based. So making sure you understand when you're researching product that you know there is a difference, and there is going to be a very demonstrated difference in belief structure in what matters to each of those sort of values-oriented funds or faith-based funds, in that some people may use the terms interchangeably, but know there are differences. So today, again, we're specifically going to highlight faith-based investing. We're specifically focusing in on Christian values. That's who GuideStone is. That's who the other fund families are that I'll talk to you a little bit about today. What's important to know within faith-based investing is that it focuses on the incorporation of the investor's values and convictions, and it goes throughout the investment process. There are a few ways that we get at it, but it ensures there's an alignment between the values of the asset manager that you're seeking to use and the end user investor. So what are some of these approaches? The most commonly held approach, and you'll see it run throughout every single investment provider that focuses on biblical values. There is an exclusionary element, so that is companies that are inherently bad or derive mainstream revenue from areas that we find to be objectionable. You see some pretty common areas of that in alcohol, tobacco, gambling, pornography, and abortion, and certain things that revolve around those life issues. And so you will see explicit restrictions across fund families for any variety of items in those areas. One of the other areas that comes into play is ESG integration. So that's not only excluding bad things, but emphasizing positive elements. And when I say emphasize, that's also a little bit of exclusion as well. Those ESG factors, you can either have positive inclusion, you can also have a little bit of additional exclusion from there. If you find companies with specific ESG risk factors that are particularly high, those might find their way out of the portfolio as well. But the overall purpose is to identify best-in-class companies. Then that brings us to one of the next areas, which is impact and thematic investing. So impact investing is seeking out proactively companies that are trying to do good in the world, companies that are trying to change the lives of people and better the lives of people through either the products, the actual goods and services they produce, or the type of service that they look to bring to market. You know, that is an area that you see some within the faith-based world. It's still kind of new and emerging. Something that we had done on the sort of institutional book of GuideStone proper for a period of time, not something we'd really brought to the retail investor. We actually last week did file to launch the GuideStone Global Impact Fund, so that is something that will be forthcoming. And then moving down beyond impact investing, active ownership, that's something you're seeing talked about a lot more in this space. You've had some providers in this area having active ownership as a mainline part of their Christian investing process for a very long time. Others have in recent years adopted that. That is something GuideStone does today, but I think one of the longest standing and probably active fund companies in this area is Praxis Funds. That's been a key tenet of their investment process for a very, very long time, and something they're committed to. And that's the idea that you own companies, and you'll have companies you exclude who are inherently bad actors, but companies, right? We know as people, we are certainly not perfect. And if we know we're not perfect and we are out there running businesses and we are employees of businesses, it'd be hard to believe that the companies themselves can be perfect. So where we find areas for companies to be better, it is taking that ownership stake that we have and bringing attention to issues within companies and trying to bring forward a positive resolution that we think not only will be better for whether it's customers or customers, communities where they do business, or the employees of the company. What we're looking to do is create better outcomes for people, and at the same time try to create a scenario where you are enhancing the long-term value of the company itself. So this shows the growth that I was talking about in assets. What you see here obviously is more explosive near-term growth in assets piling into values-oriented investments, and faith-based obviously falling under this umbrella. And this shows you a little bit of diversity of those assets, how many of them utilize both a shareholder resolution or an advocacy and engagement process, or ESG only incorporation. And that's really just looking at kind of those risk metrics around ESG and kind of having a quantitative only methodology to how you do that. And I think it's important to note the difference, because when they talk about ESG only incorporation, that gets into what the industry calls greenwashing, or kind of doing something in name only, not necessarily having a heart behind what you do. And I think that's a big difference with faith-based, because I can tell you every provider within this space, there's no question behind the faith convictions that they are looking to bring to this product, that what they're looking to bring to your clients. And this shows a little bit of breakdown on where dollars have gone. A lot of those ESG products are separately managed accounts, so there's a degree of customization to them. So where are the dollars emphasized over time? Where has that growth gone? You see pretty broad balance between the actual E, the S, and the G. A little bit less, and this might be a little surprising, that environment is one of the lower level pieces of ESG. But a lot of it does go down to corporate governance and social issues, whether a company through its goods and services touches on that, or how that's affecting their employee base or customers. So let's talk a little bit about the investor sentiment, right? How do your clients feel about this? How do prospects that you're looking at going out and trying to bring into your portfolio, into your book of business? So looking at, acceptance from advisors, right? And that's a direct reflection of where do you think investor demand is, through your advisors that Financial Times, puts in that top 300, top 400 list. You've seen remarkable growth in the number of people that are utilizing some element of ESG SRI fund within their practice. I mean, you are just north of 40%, and you're now, at least within June of 2019, you're in spitting distance of 70%. So that is remarkable growth over 2 years. And in some of the studies and things that I've seen in between this, obviously we don't have the Financial Times area back yet, you saw year-over-year growth again from 2019 to 2020. 2020, I think everyone has seen that COVID has obviously thrown us all a very different way of life this year. And it's really it stirred a lot of people to think differently about things. And so you have seen this emerging willingness of people to talk about these things, get at the heart of what matters, and incorporate that in every layer of their life. And so 2020 in a way has presented us a very good window to talk to people about things like this. Let's talk a little bit about a big provider, because that's somebody that has pretty good data on their advisors, and that's Morgan Stanley. They actually launched their impact investing platform back in 2020. It was a fledgling platform with only a few products on it. Today, it has over 120 different products available on there, so advisors have at their disposal a very wide array of product, and within that 120, there's a pretty good bit of faith-based product on their platform as well. I apologize, you'll have to bear with me for the water here and there. Allergies are getting the best of me here in Texas. We're having a little bit of unseasonable warmth and a good bit of wind, of which those are not great for seasonal allergies. So the investing with impact platform, right? This talks about the demand that people didn't necessarily know that was out there. They forecast, I think on the conservative side, and most firms will do that when they're thinking about what's the real growth opportunity for what we're doing. And they projected that they'd have about 10 billion go into that platform. And they more than doubled that as far as client assets that ended up going into that, hitting 25 billion back in 2018, and again has grown significantly since then. So I think they even underestimated pretty drastically how willing clients were to embrace something like this if they were simply asked the question. And what you also see within the advisor population today is that you have 74% of advisors using at least one product from the impact investing platform, and nearly a third of their advisors are actually using 5 or more products from that platform. And so you see very wide breadth as far as acceptance from people, but you also see a pretty good amount of depth and advisors getting in there and actually implementing this in a more overt way for clients. And Lily Traeger runs the group there. I've interacted with her from time to time. She's got a very, very big passion around impact investing. And, you know, even in conversation with her, and this was in the guise of looking at GuideStone product, she was pretty floored at honestly how much, once advisors had a conversation with their clients about how the clients just wanted this. Now, again, because it's values, they all have different things that are sincere to them, and obviously why some faith-based product got offered there, that wasn't a core of their offering on impact investing. They realized how much opportunity there was with a Christian investor. And so again, them looking to enhance availability and bring a specific value set that meets the needs of clients. So where's some of this growth coming from? I don't think it's a secret to anybody that this is a topic that matters to millennials. And millennials is a pretty, you know, wide topic, but I think what you see there too, your Gen Xers have pretty strong demand for this as well. And the other remarkable trend that you will also notice is ultra high net worth clients. It is also a very big want for that marketplace as well. So it's not just early stage career earners. I know that's not what most people are looking to build their book on, or people who are fairly new to the workforce and have not amassed a lot in the way of assets, but this will ultimately be, as you've seen generational wealth transfers before, this is going to be the recipient of a lot of existing client assets, and it's making sure that you understand the wants, the needs of those people, and can readily address those. Now, what I'm going to show you next, this is, I think, was, to me at least, when I saw it, this was the more shocking headline figure. When I saw each of these 3 pillars here, knowing that their investments are doing social good, not wanting to own particular companies because they violate principles, and then willingness to divest from a company if it had an ethical or environmental issue. I would have expected this out of a survey of a bunch of millennials, and I don't think anybody else would have thought differently. What was interesting about this survey, which included 8,300 investors, is that only 223 of them were millennials. This was actually a very broad-based study. It covered a pretty, what I would call statistically significant dispersion of gender, age, country of origin. And so it's reflective of what is really a more significant and broad trend in the industry of wanting to do something like this. It's just simply addressing it. And I think what they also found is most clients don't proactively bring it up because they don't know whether it's something that they legitimately should look at. This is a little more of a breakdown in that investor demand. So as we could see, people very clearly didn't want to own certain things, but at the same time, that nearly 3/4 wanting to make a positive impact with their investment shows the need for the industry to move simply beyond exclusionary screening. It's pretty clear that based on what investors want, we can't just stop there, and you have information, you have data available to be able to take it further than that. So to make sure that we as providers are doing that and making sure that we are building product that's in alignment with what investors are expecting today. Ethics matter to people. That one, again, shouldn't be a surprise, but it is very clear that that's what people are demanding, or well-run businesses. And I think the one, though, that was not discouraging, but this is where the industry can do a lot better in educating investors, is that 2/3 of them believed that they were going to have to sacrifice returns to be able to get that alignment. And I think that is probably the most widely held myth in this area. But again, the proof is in the numbers, and that is incumbent upon us as product providers to demonstrate to you all that there's a degree of excellence so that you can tell your clients that. And hopefully you'll see that as we look through this next portion on building effective client portfolios. So this is what I talked about, the negative performance myth. How does, as Morningstar defines all of these ESG, faith-based, values-based, you name it, they call them socially conscious funds. So how does that category compare against the global fund universe? What you see is there's some areas of outperformance, some areas of underperformance. None of them are what might be called statistically significant differences. You'll see a little bit of ebb and flow in each one of those on a quarter-to-quarter basis. So what you're able to see is that the product that falls under this umbrella is going to bring to you the same degree of quality, and you should measure it the same way that you would measure a secular fund from a return standpoint. You are still a fiduciary for your clients end of the day, and that's kind of how you need to look at it. I think the one trend that is notable, because again, like I said, you'll see little tweaks here and there, but that difference in having fewer 2-star and 1-star funds in the broader universe, that one has existed as long as I've been tracking this and looking at this in Morningstar. And I think that is representative of the fact that the exclusion of companies over time, the industries that are excluded, because if you look at faith-based or you look at broader ESG product, you will largely not see the alcohol, the tobacco, or the gambling names. And you will have times where those particular stocks do outperform some of the broader market components, but not owning those names actually from an attribution standpoint, at least within the last decade, has led a lot of these products that are socially conscious to not drastically underperform, and that keeps them out of that 1- and 2-star category. So I wanted to bring in a graphic of from Morningstar Direct, just looking at some hypothetical 60-40 portfolios within the faith-based world. And I want to hit on a point, but it's a relevant point as you're looking at incorporating something like this into your practice. With a few of the providers out there, you could build a total diversified portfolio. GuideStone being one of those few within the faith-based space, and it's because of the volume of assets we manage for retirement clients, we had to build a lineup that could build complete portfolios. Beyond asset class specific funds, we actually run a series of target risk and target date faith-based fund of funds. And so we had to be able to build product to accommodate that type of fund of fund structure. So we have things that run the gamut of investments. What I did was build a 60-40 portfolio of GuideStone only funds, but then created a 60-40 blend utilizing multiple fund families within this. So again, much like you would look at building a fee-based account. And what you see is that when you choose to move away from a proprietary only lineup, you do have the possibility of generating some additional returns. The dark green line represents the blended portfolio. The light green line represents the GuideStone funds only. And that's, again, getting at some additional diversification. You know, in particular, there were 2 outlier funds, and I can talk about that do tend to skew that up in a meaningful way. But depending on your situational use within your practice, you can put time into researching and building portfolios like this, but its situational use is a little bit less than you might be looking at a scenario where utilizing one single fund family does make sense because of the way that they build product, all the pieces they bring to bear. It's going to work, and it's going to be a more manageable solution for you and for the client, depending on use. And again, you look, when you have a blended portfolio versus a normal one, you don't have a huge statistical difference in that. The one thing that I will tell you, when you look at some of the other faith-based fund families, I haven't necessarily been able to put my finger on the why, they do have a significant cap weight difference between us within their large cap product. They tend to not have a lot of the exposure to what you might deem your very large companies within an index. They tend to go a little bit down cap weighting. Fixed income, you don't necessarily see that apply. Those are actually pretty similar when you look at what's held there. All right, so then moving on to, all right, well, what was in there? Was this apples to apples or not? When you look at the lineup, it looks a little bit different just on the way it's blended, but yes, so GuideStone, just based on the areas where we have some, and I was looking for best of breed product when I did this, so I put GuideStone in areas where we would be deemed, just from an objective measuring standpoint, a best of breed strategy. Then I included in some Eventide, I included in some Praxis funds, Crossmark Global Investments, a little bit of Timothy Plan, where they demonstrated some excellence, and then pretty similar weightings across that. But if you look at the holdings analysis, again, there's not a lot of separation between them, and you kind of look at that style trail, again, pretty similar. So again, you have options when you're doing this, and you've got across the board with all these fund families, depending on certain strategies, you have demonstrated excellence over meaningful windows of time. And again, gets back to the star myth. You know, it's not we're not asking within this faith-based universe to judge us as a provider or any of the other providers. We're not asking you to judge us differently than you do the rest of the investing world. We are trying to demonstrate that we can adhere to values and still deliver a level of excellence. All right, so let's talk a little bit more about some of those approaches. This is what I mentioned earlier. You've got this ESG, you've got this SRI lens, those are the big box topics. What you see is a lot of overlap with that. And as I mentioned, when I was talking about the 1- and 2-star ranks, you see a lot of areas of commonality from an exclusion standpoint. But there are differences. And if you look at, just as an example, what we exclude at GuideStone, the one thing that's going to really stick out is the abortion and life-oriented screens issue. That is not picked up on by traditional ESG or SRI products. So if someone thinks that they're going to get that, which is a very deeply held, sincere belief of most people within the Christian space, that is not going to be found with traditional ESG products. So then where do you look to go? As I mentioned, what are some things that investors talk about, you know, getting to that group of people that want their investments to make an impact? That's where a lot of this industry has moved beyond just simply exclusionary screening, and we're one of those. Active engagement is becoming a bigger part of what companies want to do in this area. Like I said, we do it. Praxis has been a long-term player in doing it. Eventide does that as part of their process. So again, something that as investment providers, we are, not only do we see that as our sincerely held Christian belief, we think we should be making a difference. We know that's what our clients want us to do. So again, getting back to the statistics, the why of how we do this, you know, it gets back to aligning ourselves with the values of the people that invest with us. The one gap that we see today, and you saw that in one of the charts earlier, was the difference between people interested versus people implementing. The one area that studies have consistently shown, and any of you that have dealt with Eventide before on this, I know Rob and John has been a big voice in trying to address this, and that is that it's advisors being willing to have that discussion with their clients, because you are the subject matter expert to them, and a lot of them don't know whether something is legitimate or whether it holds water or whether they should even bring it to your attention. And so, you know, one of our initiatives, one of Eventide's, is trying to work with you all on an individual basis on how do we ask, how do we have that ask in a good way, and and it not come across as, well, you know me, you know my value set, why wouldn't you have brought this to me? I think that's a very, I think that's probably a wrong way for a client to want to look at it, because again, as I mentioned to you 6.5 years ago when I came to this space, faith-based was in its infancy. GuideStone, which was the largest product provider, didn't even offer their funds to the broader public. And so it's not like this was some, you know, giant secret that you're hiding from clients. The industry had not matured enough to bring you all a bunch of viable product. And that industry has really matured over the last 5 years, and is something now that makes sense to bring to talk to clients about. So shareholder advocacy is something that I wanted to talk a little bit more about, because I think this is one of the key areas beyond just a pure impact fund where companies can make a difference across all equity asset classes, and it's done from a very sincere Christian spirit. And I think this is one area that really helps to tell the story to clients about faith-based investing. And that's using your ownership position in equities to try to bring about positive change. And that's done in a few ways, but there are some very tried and true methods of doing this. People can kind of have their own approaches to it, but you tend to see this sort of consistent results-driven way that starts with something as simple as letter writing. And that's reaching out to companies as an owner and basically going on record and saying there's a particular issue that you perceive or that you see that you want to address and understand a company's stance on it. And that's kind of step one. That's putting yourself on the record. And one of you know, the areas that I think faith-based investors in particular kind of have a very outsized voice in this area. We are not the biggest asset owners by any means in this space. Faith-based investors, both money managers, institutional investors, we make up not, you know, we're 2.6% of investable assets that are filing shareholder proposals. But where I think faith-based, and this is the platform that we're coming from, because the values are the core of what we do, we represent over 1/3 of total proposals that are filed at companies in any given window of time in recent years, at least. And that's always something that has really held true with faith-based investors. We're never going to be the biggest voice in the room, but we're a voice that's always going to care and is always going to be there. And that brings us to the corporate dialogue. That's kind of point number 2 when you talk about working with companies. Once you've established that point, usually the next step is they will reach out to start some kind of discussion with you. A lot of times it's a very boilerplate company response on things, because they're really trying to gauge and understand, right, how serious are you? You know, what's really driving this? What's the motivational factor? But it provides a good two-way street where you can understand each other's position and bring issues to the forefront that it's really hard to include in a letter. And then that brings us to the resolutions that you saw in the last chart, the proxy voting. If there's not going to be a mutual agreement between the two parties, or a company is simply not willing to engage in dialogue, that's where you have the ability then to put a proxy proposal out there, seek votes, kind of campaign to get votes, to put investor voice out on record in order to try to get a company to change behavior. Or in the case of a resolution, what you will see are companies that aren't willing to come to the table. If a resolution actually gets filed and is going to go on record, a company will enter into discussion if you as the investor are willing to pull back that resolution. And so most companies don't like taking things to proxy. That's not what they want. They're willing to discuss and negotiate behind closed doors. But there are times where proxy is a necessary shot across the bow. Now, what we've chosen to do over time, along with some of the other people within this faith-based world, again, like you saw in there, we're not the majority of assets out there in the marketplace. And so for us, size is not an advantage as individuals. So what we have chosen to do is largely come together with other religious institutional investors, and we try to, as groups, almost pool our shares together when we go to a company. We go as multiple share owners and say, okay, combined, we represent this as an investor with you. We have the same viewpoint on this issue. We all believe that this is a challenge that is detrimental to you as a business. We see it as a values issue for us, but we try to bring it to them in a business format and help them understand the potential business risk or value benefit gained by implementing a particular policy or removing some policy or portion of business. And so this is GuideStone's big picture, right? We participate with ICCR on the shareholder resolutions. But for us, you want to know, are you guys throwing darts at a dartboard? How serious is the faith-based incorporation of what you do? We have dedicated resources. So we have a full-time analyst. We have half the time of 2 other analysts that also work on this. We utilize and are willing to pay top dollar for upper echelon institutional caliber research tools to make sure that we have the best data. And we simply use multiple tools for one reason. Even best-in-class tools like MSCI, ISS, you will actually find meaningful differences in what they assess as far as lines of business for a company or revenue generated from a particular issue. We've had instances, and you see this in emerging market companies, you see it a little bit less in the US today, where one of the vendors might tell us that someone is less than 1% revenue or even 0% revenue from a particular business activity, and the other one comes back and says they're 15, 20% revenue. And that's a pretty big gap when you're talking about a corporate entity and the revenues they're generating. But we have an understanding that there's not a monopoly on ideas, there's not a monopoly on research, and we want to make sure that we're making the best and most well-informed decision we can. And that's the research done. And then we have a broader committee that's made up of a couple of our senior executives, our CEO, COO, the leadership of our investment arm, and then an individual coming from the denominational side of the Southern Baptist Convention to make sure that that values element is being adhered to by GuideStone as a subsidiary of the SBC. And it is all the research is presented to the committee. The committee votes on whether companies should or should not be excluded. And for us, that exclusionary list is a living, breathing list. We have companies going on and going off of that list on a quarterly basis. And we contractually obligate all of our sub-advisors, the 40 some odd sub-advised strategies that we have, they are all required to adhere to that list and have a very straightforward implementation policy for the list that we curate for them when it comes to the exclusions. All right, so let's talk no longer about GuideStone. Let's introduce you to some of the other people within this arena. Eventide is probably what I would say one of the most well-recognized names within the advisor community beyond where GuideStone is. This is a company that I like a lot of what they're doing. I've gotten to know these guys over the years. Probably not we're a little bit unique in that we're wholly owned by a denomination, but for an independent company, you're not going to find a more sincere group of believers out there in what they're trying to do. And they very much try to use that embrace methodology. So they will restrict companies that fall in that little red area of their business 360 analysis when they're looking at a totality of the exposure of a business and its goods and services. But what they're really looking for are the best actors there, and they're looking for people that are really trying to create values for society. Regardless of what asset class, they really kind of pioneered stuff that was in the growth equity space. That was their bread and butter. But since then, they've really diversified their product line to now have things that will fall on the value side of the books, things that fall on the fixed income side of the books. But really a great shop top to bottom when they're looking at what type of product that they're going to bring to you. Crossmark Global. And in particular, for most of you all, this will be represented within the Steward mutual funds. This is actually, well, Crossmark Global is its own investment firm. They're actually wholly owned by the Southern Assemblies of God, so they're also denominationally affiliated from a money manager standpoint. Their exclusionary screens look largely like ours. Exclusionary screens are the primary focus of what they do. They have a variety of product across asset classes. Theirs are a lot more index driven or particular enhanced index strategies across what they do. That is kind of what Crossmark built its business on. They also have a separate account business, but the separate account business, again, similarly enhanced index oriented products. So the Steward Mutual funds have a specific set of screens for people depending on asset size. If they go to the separate account, there's a little bit more customization that they can do there. Praxis. Praxis, also denominational affiliation. Theirs is the Mennonite Church USA. And that is really the basis for their values. They, again, have similar, you'll see similar exclusionary screens between Eventide, GuideStone, Praxis, and Crossmark. Praxis is very much strong in what they would deem the impact space, or the really strong incorporation of ESG considerations. That's, again, stems out of the Mennonite origins that want to do good, is a big part of what they do. They're probably most well known for the Praxis Impact Bond Fund. That's one of their single active managed strategies. The rest of them are typically sampled index strategies that Apereo builds for them. And then Timothy Plan. Timothy Plan is the one mutual fund family that has a slightly longer track record for us, because we've been running the money that you see for a lot of our mutual fund strategies. We've been running since the mid-70s in unregistered trust. 2000, we converted them to registered mutual funds. But Timothy Plan as a mutual fund family had existed longer. This was probably the first and only name most advisors knew if they ever encountered faith-based investing prior to 2010. And so, you know, Timothy was kind of the moniker there. Exclusionary screening is the only element of what they do. That's really what they've tried to hang their hat on over the years, and you know, really hold themselves out as probably the most stringent in the business. Something that they embrace. They're probably the only one that really holds themselves out as zero tolerance within the mutual fund space. But again, that's there's a balance that you have to bring to bear when they're looking at that, as far as there are certain policies they've had to roll back as laws have changed within the United States. But nonetheless, what any of these, like I said, we all have the same core tenets when you look at us from top to bottom. And when you're looking at each one of us, it's that same Christian heart and implementation and process that goes into play for each one of these providers. And we each have areas and asset classes where we've been able to demonstrate real excellence over time. So that brings me to what is the end of my prepared remarks. I think I actually ran a little long, so my apologies for that, but I'm happy to address any questions at this point.
And, you know, Will, while we're waiting for a few questions to come in, you know, one thing I can just say, and I've listened to a few of these, I've been with Kingdom Advisors since 2013, and on this board only 6 months. But boy, when can you go and spend an afternoon with an individual like yourself and get so much information and so well presented? So I really thank you, Will, for bringing in not just only GuideStone, but the other players. And I've heard you say this before too, is we're all after the same thing. And you know, in God's economy, there should be no competition. And if we are really serving our Lord, that's how we need to address this opportunity. So while I'm waiting for some questions to come in, though, one area I'm seeing a lot of interest in is next steps. Is, you know, a lot of information. Maybe the door's been cracked today. Maybe the door's been wide open. Maybe there's some people on the call that have been doing this a long time. You know, where can you go for support and guidance and fellowship? And so for that, I'm going to bring Aaron on, where he's going to talk a little bit about what LPL has specifically put together with the affiliation with Kingdom Advisors to offer just those areas for next steps.
All right. Thank you all for joining today. I am Aaron Larson. I've been on the board since it started almost 5 years ago. So I've probably met a handful of you in the past. I'm just going to take a couple minutes to talk more about what our community has available to you. So on the screen, you should see our what we call microsite. It's actually hosted by Kingdom Advisors. So up in the top corner there, it's the kingdomadvisors.com/LPL. So if you go there, you can scroll through and see all of this information. You will see at the bottom there, or now kind of scrolled up, the upcoming event of today. So that's how we would have registered. You will start to see a couple additional ones coming up as well. So I'll highlight those right now. One is the quarterly inspirational call. We typically do those every 3 months or so. And the next one's going to be pretty exciting. It's actually going to be our first time having an LPL advisor share his testimony. Dan Klein is going to be talking about his story, and it's going to lead into a great time of preparing for the end of the year and the beginning of next year, thinking about what types of things you want to accomplish, not just next year, but really in your life and what's really important. So that's going to be a really cool, inspirational call. It won't necessarily talk about BRI or any of these types of things. It's really meant to lead us into a time of thought-provoking inspiration. So that is going to be at 3 o'clock Central Time on Tuesday, December 15th. So that's coming up, and we'll have the registration link here soon, and you should be receiving some emails on that also. I do want to highlight the next bi-monthly study group call. So again, these are about every other month, pretty consistent time of day. And we typically wanted to finish this focus on faith-based investing, biblically responsible investing here for the calendar year of 2020. That was our original goal, and COVID changed that for us. So we ended up having to skip one of them back in March, I believe, and we do not want to have that one missed. So we're pushing that into January, and that will be our final biblically responsible investing segment. So that'll recap all 6. So if we click on the Community Resource Library tab over there, you can actually capture the replays of either the quarterly inspirational calls at the top or some of the bi-monthly study groups down below. So I encourage you to click on those if you did not catch those in the past. And on January 20th, we will actually be hosting one led by Eventide, as Will mentioned, and they will be capping out the final segment of that. I'm looking for the topic. It's going to be called the Sharing Biblically Responsible Investing. So it's a great way to end this. We've spent some time learning what is BRI, et cetera. And now we're going to have Eventide talk to us about practical steps of how you incorporate that into your investment portfolios, but also following that up with how do you talk to clients about this message. So that's something to look forward to and sign up for. And let's see, that might be all I have. Oh, no, the last thing I want to mention is for the 2021, we are going to be shifting these study group themes to the focus on charitable giving. So that's something to be looking forward to. We're going to have 5 or 6 sessions on things like donor advised funds and some more practical ways to talk to clients, whether it's about the implementation of it or just the conversation. So look forward to 2021 as we are starting to build that out now and who those presentation presenters will be. So that's all I've got here. Pete, we'll turn it back over to you.
Thank you, Aaron. And we do these out of the goodness of LPL and the management there, and also too for those maybe on the call that aren't familiar, is Kingdom Advisor does meet with groups of other like-minded advisors, whether it's any other custodian, Ameriprise or One America or Merrill Lynch or any of those other ones. And so I've been in a group And that's been probably the bread and butter for me of, a monthly commitment. And if it isn't in person because of what we've been through in COVID, they have some great technology for us now that we can meet virtually online. So some additional great teachings. Did you want to touch a little bit on the faith-driven investor here?
I did. So thanks, Will, for popping that up. I did mean to include this. This year was really coordinated by John Siverling, who is at Faith Driven Investor. And so I want to give him a shout out for the entire year of putting together the speakers like Will and everybody else that's given their time over the last 12 months. So anybody that wants to continue to dive deeper can go to faithdriveninvestor.org. And the whole website's pretty good, but if you dive into the marketplace area, you can kind of see how you can get involved if you want to dive even further into learning about this, not from one particular fund family, but really looking at it from a large scope across the entire industry of investing and thought leaders. So I'll plant that seed. Again, thank you to John Siverling, and encourage you to go out to faithdriveninvestor.org.
And I do have a few questions here, Will, but I'm gonna answer them all offline because as everyone knows on this call today too, you guys are always there and available to reach out. But I really want to thank you for your time, Will. You've done an excellent job of presenting this, and every time I'm on a call, I learn something new. So I'm going to close this in a prayer to our Lord Almighty. Holy, holy, holy is the Lord Almighty. Lord, thank you. It is so much a privilege and a pleasure to share with this community of like-minded individuals and advisors in a space, Lord, where we can gather and know that our thoughts and prayers are answered, Lord. And we also think that we're able to do that in this country, that we can gather together. Lord, I specifically pray for our leadership at LPL, for your desires, Lord, of what you want to have happen in the hearts of our advisors and in the hearts of our clients. Thank you for this day, Lord, and thank you for everyone on this call. In your Son, Jesus' name, amen.